Is this a source of inflation?
In theory, this is inflationary just because you're literally pumping money into the economy. The thing is that, it's mostly wealthier households, which have a lower propensity to spend than the average household.
So this is not only inflationary, but exacerbating inequality. And so not only is it inflationary and causing a lot of spending, especially at the high end.
Well, it could be inflationary in the housing market because these people are giving their kids money to put a down payment on a house.
There is some of that for sure. So the short answer is yes, this is inflationary. The question is how much and if it's the most important thing. And it doesn't seem like it's in the top
The
three.
number's not big enough for it to be the most important driver.
Yeah, you're talking about let's see, where are we at? $1 trillion on a $23 trillion economy.
But I think the bigger point is what Michael's saying, $3 billion a day. So that's, let's say, the top 30, 20% of households being handed, maybe not directly because they own funds or whatever, but being given $3 billion a day more to spend money.
Yeah.
So that's bigger than the fact that it's $1 trillion. It's the transfer.
I remember this debt goes everywhere. So the Chinese own it, the Japanese own it, the Europeans own it. So it's a fraction of the total.
Okay.
But it is a lot of money, sure.
So real rates are high. You brought a chart. What's your interpretation of where real rates are today?
So I brought two charts. And talking about how much do deficits matter to the market. And the first chart was real yields, which is just nominal yields, what you see on the screen, minus inflation expectations. And this is real yields going back to 2003. And real yields right now are right where they were from 2004 to 2007.
That's quite a round trip.
It is. It's a dramatic round trip.
Yeah.
Because the Fed's not buying bonds like it did from 2009 to 2022. So real yields are now not depressed anymore, but they're no higher than they were in the early 2000s when the deficit or the debt was half of what it is now in terms of GDP. It was 66% in the 2000s. It's 120% now.